Hello everyone, a lot of people has been asking me how to make investment in stock market. Well, I told them, you can make investment decision, to buy or sell, based on company life cycle. Before we begin, please subscribe to my channel. I make few assumptions on product life cycle and cash flow statement. In normal circumstances of product life cycle, companies will be facing 4 stages of life cycle, which is introduction, growth, maturity, and decline stage. But from this theory, how do we determine each stage of the company life cycle? This can be done by observing the cash flow movement from 3 main activities, which is operating, investing, and financing. Let's begin with introduction stage. During this stage, companies will have positive cash flow from financing activities as collecting money from launching IPO and issues new shares and warrants. Negative cash flow from investing activities because need to purchase large amount of PPE to run day-to-day operation. Negative cash flow from operating activities due to high research and development incur. For growth stage, this stage will last for 10 to 15 years, but most companies hope stay at this stage because positive cash flow from operating activities derived from high percent sales and companies started to gain market shares. Negative cash flow from investing activities mainly due to expansion of business. Positive cash flow from financing activities derived from new shares and warrants issues or getting loans from banks. For maturity stage, companies have achieved stability from positive cash flow from operating activities but slow increase sales yearly and capture most market share. Negative or zero cash flow from investing activities because income derived from subsidiary, licensing and franchising fees. Negative cash flow from financing activities due to companies started to pay dividend to shareholders and repayment of loan. For decline stage, doesn't means companies have negative sales but sales started to decline although achieved positive cash flow from operating activities. Positive cash flow from investing activities is no more purchase of PPE. Negative cash flow from financing activities as companies keep pay high yield dividend to satisfy shareholders and repayment of loan. After understand each stage of company life cycle, now we should determine at which stage should we invest. It is advisable if we invest in growth stage because companies started to growth, capture market share and moving upwards trend which will give us 100 or 200% capital gain. We shouldn't invest during introduction stage as the business model might fail before launching any product and services. This gives benefit to early players. If we have bid at early of growth stage, it is advisable to sell at maturity stage, probably beginning of maturity, but may sell at end of cycle for collecting more dividend. However, if we not consider to sell at maturity stage, we may need to see company's prospect plan of future grow. If yes, advisable to keep the share. If not, better sell off the share. Other than that, if we invest in maturity stage, which is late players, it is advisable to obtain information of company's prospect plan whether the companies continue growth stage or decline stage. If growth stage, better start to invest, but if decline stage, better to wait for good opportunity. I hope you will enjoy watching my video. If you enjoy watching my video, please hit the like button and subscribe for more videos. Thank you.